Hello and welcome to Simple Cryptocurrency Videocast. My name is Claudio and this is CryptoChain, the channel where I do cryptocurrency news, reviews, interviews and blockchain games reviews, and we even talk about trading sometimes. And we've got a special guest with us today, which is Matty from Oh Hey Matty. We've had him before on the channel and he did have a look at the charts. Unfortunately, we had some technical difficulty with the recording software, so the charts couldn't be extended to the full screen, but that's been solved now, so you will be able to see it. And he's here to talk about crypto trading with Ontology and Neo against the USDT pair, and maybe some other stuff that he'd like to share, maybe about the news or Bitcoin and what's been going on with the dip and things like that, you know. So Matty, welcome.
Thank you. Yeah, I really appreciate coming back on and the invite. It's always nice to have that revolving door. We'll have to get you over on our channel soon.
Definitely. I'll really be looking forward to that. And yeah, I mean, we're gonna get straight in, and basically we're gonna be looking at the ONT USDT pair. But before we do that, actually, we just to get kind of your a bit of info from the latest Bitcoin dip. What's your opinion on that, and what do you think? Was it backed, or was it whale manipulation, or?
I don't like to buy into those narratives. I mean, I have narratives out there for sure, but as far as I'm concerned, I still stick to the entire rise, which is we had a technical break at 4.2K. This is what I talked about back at Consensus with Tone Bays, which I was talking about with you before we came on the channel.
Yeah.
When we hit up to the 5K range, there was some manipulation that had happened there, but it was mainly related to the Bitfinex arbitrage that was going on from the New York Attorney General's office. And then when we got up into the 8K range, there was a lot of, I guess, speculative buying related to Libra, related to Box as well, perhaps along with that entire run. So, for me, Bitcoin's number one use case at this time, unfortunately, is speculation. And when there's nothing to speculate on, or things are just kind of hanging out there, we have price decrease and we have price accumulation. And when there's things to kind of chew the fat on, people speculate and they go on and so on. The way I look at it is, if you don't need something, then you need people to want it, right? And people do not need Bitcoin right now. So the path to adoption right now is that we make people want Bitcoin. And where that want comes from is the speculative nature of the currency. People look at Libra, they see a potential to expose almost a 60x exposure in terms of population increase, in terms of being able to utilize Facebook's app and Libra in concurrent with Bitcoin. That's a major adoption milestone, but it's not an adoption out of necessity. It's an adoption out of want. If you look at an ETF, that allows people to put Bitcoin in a safer way into people's portfolios who don't want to hold the underlying asset and are able to access it through their 401k or whatever. That is a want versus a need. So in the future, we may need Bitcoin if we want to have our money be decentralized and have true ownership of it. And there are places in the world that need Bitcoin now. But for the mass majority of people, they do not need Bitcoin. They either want or they don't want it. And that's why we have such a low population rate in crypto in comparison to maybe the adoption of something like PayPal or something like that, or just using money in general. So for me, if we want to see that adoption, people either need to want it or they need it. And until that comes, the main use case right now, out of maybe what we use it for, the main use case is speculation and price increase. So what you saw was this gigantic rally up to 13 or 14K. And it was based off of the fact that people were speculating that the price would go higher due to these news events. And now that Libra has been pushed off, and I mean, it's pretty clear cut for me, right? You see that Libra got pushed off, and as soon as Libra got pushed off, price started coming back down, or as I like to say, simmering, right? You had that accumulation period because people were unsure what was going to happen. Maybe there'd be some progress, but it's very clear that in the United States that the government is directly opposed to Libra at this point being a money transmitter on that level. And right now, it just so happens to be that it's coinciding with this effort that the United States government is having towards big tech at the moment. For a long time, they allowed big tech to just run rampant with whatever they felt like doing. And for some reason now they're just like, we're not going to let that happen. It's really focused around this worldwide shift of privacy. It started over in Europe, and then it's now come to roost in the United States, which is common.
Yeah.
But I think it was Article 13 or whatever you guys had over there in Europe, if I'm pronouncing that correctly.
Yeah, that's right. Yeah.
But there's a large privacy movement, and that's still ongoing, as you can see with some of the cookies and privacy stuff that we now are forced to have when we visit a website. But because of that, and because of Facebook dropping the ball with the Analytica case, there's just been a big backlash towards big tech, and it's just an opportunity for constituents in the United States with their lobbyism and stuff like that to go after Facebook or kind of rein in some regulatory oversight in an unregulated area. And it just so happens that is also going to paint a negative brush towards the Libra adoption. So because that was the main catalyst of the exponential move, now we're starting to simmer off and price is starting to come back down. So price will continue to drop until there's either a long accumulation or boring period, or it will start rising if there's a reason for it to rise. I did find it very interesting, and the bounce that we're having today is mainly related to the $20 million that just got injected from Tether. I thought it was also funny that they're getting sued by the same people who sued Roger Ver. That was an article that I saw this morning. I haven't gotten the full chance to read the entire contents of that article. But if it's anything like this New York Attorney General FUD, and from what I understand, this is even worse FUD than that, then I would just expect some sort of arbitrage opportunity that happens on Bitfinex, and that would cause a pump in the price, not a dump. Most people expect that when there's Tether FUD that the price will drop, but typically what ends up happening is that the price rises because there's an arbitrage opportunity because Bitfinex continues to stay in business.
Yeah.
And then they print more Tether and then use it to buy up a bunch of Bitcoin and then pump it. Now, a lot of the times that will correlate with something, as we saw with the New York Attorney General arbitrage into the Libra news. They kind of went back to back on a correlation, if you would. But yeah, I mean, for me, there's no manipulation, there's no whatever. I've been calling for 7 to 9K for the better part of the last 4 to 6 months. I said this thing's eventually going to slow down, and as soon as I heard that the Libra stuff was getting pushed off for perhaps up to 2 years, that was kind of a telltale sign for me that things were over. Also, from a technical perspective,
wow.
I just saw the accumulation after the blow off. There was a dead cat bounce, and then eventually we were just in a waiting period. We can take a look at that as well. But no, I don't buy into manipulation narratives and stuff like that. I do think that this market has very little organic liquidity.
Yeah.
Especially because we talked about before about how there's really not any retail in at the moment. So when there's less organic liquidity and most of the liquidity is being provided by services on different exchanges, then it is easier to move the price per se. But I don't really buy into that stuff. I still think that there's some sort of level of natural occurrence of going on. If it was purely manipulated, I wouldn't be able to make money trading it. So that's really what
that's good. And just off the top of your head, from the last TA that you've done, where's the best resistance for Bitcoin and where's the best support at the moment?
Yeah, so I mean, I can share my screen and go over it if you want.
Yeah, sure. We can do that as well, just to make it easy. And then we can move straight into ONTOLOGY.
Yep. Let's find this. Are you able to see my screen? Okay. So let's head over to Bitcoin first, because right now I'm currently I was on Ethereum. So in terms of support, let's start there because I think that's the easiest. And this is kind of just a reiteration from my video that I put out earlier today. Now, the Renko chart the Renko chart Fibonacci's are a little bit lower than these numbers, but I kind of break it down into tiers. So if we take a Fibonacci retrace from the bottom of the move to the top and establish the swing high up at 14,000 as our recent high, and which is pretty obvious that it is, then we can see that our 0.5 Fibonacci retracement is at 8,500. That's really our current resistance from 8,500 to 9,000. 9,000 is the quintessential resistance because this correlates with this previous resistance that came on the way up. Also correlates with some stuff over here. But for the yeah, this is on the daily chart. And then after, if you manage to break through 8.5K, 9K was the previous support of this consolidation when we were up in here. And this is kind of when I was talking about that it was very easy to identify when the top was, because you just had this pure on trend on the daily between the 21 EMA and the conversion and baseline on the Ichimoku. And then we were able to see this this quintessential dead cat bounce that Bitcoin loves to give us when it's at the end. But that's not really what gives it away. What really gives it away is we see our first sign of price getting beneath the 21, the conversion, and the baseline.
Right.
And we see that where this arrow is right here, that the 21 fails to break past the baseline multiple times. We go into this indecision period that lasts from the better part of the end of August to the first half of September. And then finally, Bitcoin had enough. And then that's the range that we're in right now. So in terms of support, let's say we can't break above 85, or maybe we do a Bart Simpson and get up to like, you can really get up to like 9.6, but I think 9 is a little bit fair. Let's say we do Bart Simpson up there and just retest that resistance, because we do have a lot of indecision going on right now. That's possible. But for me, in terms of support, it's a little bit more cut and dry. Okay. So you have your 618 here at the 7.2K range. This is where your gap filled on the CME. On the daily, you had this gigantic wick that went down to 6,300 from this gap that happened on the way up, since it happened over the weekend. And then you have past that, this 6K to 5.4K range. This is really the previous support of the descending triangle that happened back in 2018.
Yeah.
And if you end up breaking this, which by the way, this is the 786, so it's dangerous to get down into this range. You don't want to go between the 618 and the 786 almost ever, because it can get dangerous.
And you can go much further down. So you're saying the support is very thin around that area, right?
Each support is very strong, in my opinion, and each support will most likely need some sort of accumulation or just completely break through it.
Okay.
So, I don't think that whether they're strong or weak or whatever, the 618 is going to be, the strongest. That is
6.8.
Yeah, the 618 Fibonacci retracement.
Okay.
It's a historic place that Bitcoin likes to revert to. This is going to be our strongest. It's at 7K. I don't think this is going to be a surprise, at least for anyone that's been following. The 7K support was very strong when we're in this consolidation range. It was strong on the resistance. I just think that it's going to be a pretty good support to hold. The problem is that if you go to the weekly on Bitstamp here, you can see that this Ichimoku cloud, it goes all the way out until it rises back up again. It goes all the way out to February of next year. So you can actually have a consolidation for some time and still break down here. And if you look back at the Fibonacci retrace from the last low to the high of the 2017 market, this actually was able to come down to below the 786 as well. But I'm less concerned about that. I think that it's fair that we at least get a test of the 618 at 7,200. And I think that it's also fair for us to say that we can come down to this support again, whether it be briefly or, consolidate.
Like a flash crash, maybe, no?
It perhaps. If there's a flash crash, like a real flash crash, we're coming down here, which is going to be like 2.8 to 1.8.
Wow.
I don't think that this is happening.
Yeah, me neither. It's very improbable, I guess, right?
So here's the way I look at things, right? And this is something that I was talking to my AI expert about earlier today on one of our meetings. So when you establish a high like this, right? We break things down in very simplistic terms as traders. And when I see a high like this, what this tells me is that I've now made a lower high, right?
Yeah.
And the last low was a higher low from the previous low of 2015 on a daily time frame, right? If you want to look at it that way. So when I established the high, I established bearish sentiment. That means I now need to find out what's up with this low. If I put in a higher low, right?
Yeah.
Then I have a symmetrical triangle, which is essentially just an accumulation pattern for a bigger move, right? That's the bullish scenario. The bearish scenario is that if I don't put in a higher low, then that means that I need to retest my low.
Yeah.
So so literally from a daily standpoint, you can only have those two scenarios, which is that you're in a waiting period to find out if this low is going to be higher than the previous. And if it is, then that's good news.
Yeah.
Because you have a 50-50 chance to break to the upside or down. And then the other scenario is that you need to have price discovery to find out whether or not you're going to put in a lower low. And in my opinion, it goes back to what I was talking about before, is that this market desperately needs a reason to go up. It can't just go up because it feels like going up. And I don't see anything on the current horizon that makes me think that it's going to go up unless Libra gets approved.
Yeah.
There's an ETF approved, something big.
Something
Box
big. Yeah.
Box was a joke.
Or China. If China lift bans on crypto, maybe something major like that, some major news catalyst.
I mean, do you think that China is not trading and holding Bitcoin right now?
No, I think they are, but I think if they make it legal, then I think a lot more people will be in it.
Yeah, I mean, I'm pretty sure it's legal. I just don't think. I'm pretty sure it's legal. I don't remember them.
No, they've banned some exchanges. So basically, exchanges just can't trade.
Yeah. But peer-to-peer trading of Bitcoin.
Oh, yeah, it's still happening. Definitely, yeah.
Yeah, it's very common in. It's very common.
So yeah. So thank you for that, Matty. Now that we've actually started talking about China, could we please have a look at the NEO USDT chart, if you can? Just to have a look and see what's going on there, because we had a look at the ontology one the last time.
Yeah,
we're gonna start off with NEO this time just to see what's going on.
NEO
has a lot more liquidity as well because it's been on for so long.
It has. All right, so that was the weekly chart. Let's head to the daily chart. So one thing I'll tell you about alts is that a lot of them have been showing signs of recovery.
Yeah.
First thing I'll tell you is that I don't see that with NEO. And from a macro standpoint, I'm not very high on NEO anyway. I think
you're an Ethereum guy. You're an Ethereum guy.
It's not even about that. It's when NEO came onto the scene, more people had faith that smart contracts were going to be more relevant than they are today.
Yeah.
And they thought that the DAT revolution was here, but that was really just a pipe dream that they were selling people.
Right.
But even beyond that, you can notice that Ethereum have shifted its narrative to being that we want to offer the alternatives to scalability.
Yeah, with Matic's help as well. That's actually going to help them big time, I think.
Well, just high level, without getting into other coins, they're looking into the perspective that proof of stake and Ethereum 2.0 is going to be the decentralized future. So a lot of people criticize some of the centralization issues with Bitcoin, and they feel that they are able to maintain the incentivization, which is the most important cog in the wheel.
Yeah.
Right.
Yeah.
When if you listen to some of the people who helped develop Bitcoin with Satoshi himself, they point to the fact that the hardest thing they had to do and the thing they worked on the most was making sure they had the incentivization portion right, because that literally holds the glue together for the entire security of the network.
Yeah.
But when you look at the incentivization now for Bitcoin specifically, it now creates some questions in terms of, is it as decentralized as we would want, or is centralization even a problem? Because we're not able, it doesn't, we're not really a big, a single person does not have as big of an impact on the network now.
Yeah.
As maybe a 1% group of miners per se. So in Ethereum 2.0 proof of stake or whatever, Vitalik seems to be kind of painting the picture that the incentivization will be that you'll get a 5% dividend by holding X amount of Ethereum.
Oh yeah, I remember the news article. Yeah.
Yeah. Now I think that this also can have centralized properties to it, because eventually Ethereum's price will be so big that if you weren't like an early adopter of Ethereum and price went up to a certain point, it may cost too much for the average person to hold that much Ethereum to get a 5% dividend. So there's that. But 5% dividend is an interesting purview to it, because that is what you would get in the stock market on an average yield for like a good dividend stock. So it does incentivize people, especially if price rises, but I just don't think it solves the decentralization issue. But how does this pertain to Neo? The problem is that Ethereum is trying to build a paradigm of an alternative to Bitcoin, which isn't surprising for an altcoin to point out the flaws of Bitcoin and offer something else.
Yeah.
But, Neo, on the other hand, and I think we've talked about this before, has all these issues with the fact that they have to redo everything into this Neo 2.0, and there's not a lot of meat on the bone in terms of what's changing. They're not offering a new paradigm. They're in a 2019 saturated market where literally like 50 other blockchains came out.
That's true.
Looking to do the quote DApp revolution.
Yeah.
So they're not unique anymore.
That's very true. And there are many blockchains that have actually done things better than they have as well, because they've learned from their mistakes.
Yep, and also a lot of their good developers, they pretty much have gone over to Ontology anyway.
Yeah.
So, it is what it is. And also not like China doesn't even embrace them anymore. China embraces Ethereum over them. So it's just like, it doesn't even have that narrative where it's like the coin of China.
So what do you think about that last pump then that we had with Neo? I know we had that with other altcoins as well, but we had quite a big pump actually. It went from $5 in December 2018, as you can see there on the graph, all the way up to like $20 now.
So I remember when there was a time where people would give their left arm to get Neo at $15. Right.
Yeah.
I think it pumped to like $100.
Yeah, 180 or something. Yeah, around that.
It pumped really high. And I remember when the Ant Shares ICO happened.
Oh man, 3 cents. 3 cents, man.
That was back in, I believe, early 2017.
Yeah. No, 2016. 2016. It was late.
Was it 2016?
Yeah, late 2016. Yeah.
Okay. Yeah, and then I think the rebrand was in 2017.
Yeah, exactly. Yeah, in the summer.
Yep. Yep. And even then, people were just like, "Oh, I can't wait to buy it at this price or whatever." To see Neo today at $5 is absolutely insane. So I think like this may have been a good buy or whatever.
Yeah.
For sure, if you're just looking at it from like an Ichimoku perspective, you can just see it. This is why I tell people that you can just trade with Ichimoku 21 EMA. It's pretty simple. You have your 21 cross above your conversion, stays above the baseline. This is a potential buy area as you flirt with price. Rejection from the baseline comes down. We consolidate. I'd probably exit. And then as you can see here, it starts rising, and here is your area of interest. You enter your Ichimoku cloud, your 21 EMA, and your conversion, your baseline are acting as support.
So is that considered a good entry area, the one that you've circled around, just because it's got some bullish momentum?
Yeah, this is bullish momentum. You're breaking previous high range, and you're using this as support. So ideally, you'd want to at least trade it up to here. Right. And then this pullback would obviously be an exit. This would definitely be an exit.
Yeah, because you'd be moving your stop loss right below it, right? So you probably just ride that up while keeping a close eye and moving your stop loss accordingly, right?
Yeah, personally, I like that. Yeah, personally, I like to have a 5% stop loss. So if you enter somewhere in here, well, this is on the daily chart, so maybe it would be a little bit differently because you're trading spot. But yeah, you could use this as a stop loss area, this $7 whatever. You could take your trade here. Like the where I would like to take my trade is here and here, because this is where price starts to get back above that 21 EMA and start to test some of these resistances with the conversion and the baseline.
Right.
This also gives me a really good entry because here's my support, right? And then as soon as I enter the clouds, because of how close we are, now I know I have all the support or whatever, and now you're just really golden, right? Because you pretty much just can't lose money in this trade now.
Right.
And then from here it ends up going parabolic, and then on the retest here, I'd probably just exit. You could either exit here,
or maybe the stop loss would just trigger, depending on what happens, isn't it? Because I mean, you'd keep trying with the stop loss, moving it up, because you don't really know how high it's gonna go.
Yeah, I would be moving my stop loss up for sure.
Yeah.
So if I entered here, this, like, once it got up here, this would be my stop loss down here, and then once we broke this high, this would be my stop loss, and then once we broke here, I'd probably make I don't know, probably this to be my stop loss.
Because a lot of people watching my channel as well that are trading were actually asking me about stop losses and how far down should they really move them, and it really depends, doesn't it? I mean, what type of trading you do, if you do day trading or swing trading and this kind of thing. But like you said, I think 5% is a good percentage, isn't it, to give that leeway considering the volatility in crypto.
Yeah, so when I look at stop losses, I look at my system first and foremost. I have extensive backtesting data on the profitability of my system, and I also have the average drawdown, which is the maximum loss that I've had on a trade.
Yeah.
And I utilize that maximum drawdown not only in my risk to reward ratio, but also in my stop loss. And I really want to make sure that I'm putting my stop loss below a swing low, preferably significantly. So it really puts the onus on getting better entries and also having a risk to reward ratio that you're going to, like, pretty much for the most part follow.
Yeah.
There's sometimes there will be some exceptions, especially if you're a more experienced trader. But for the most part, you're looking to have a system like, for example, for my system, I trade the 2 to 4 hour on Forex trading. So I know that my max drawdown is going to be like 5%, right?
Yeah.
When I have a 5% move that goes against me, I know that my signal is probably switching over anyway.
Yeah.
So if I take my trade, I know that I'm at least trying to get 7.5, right?
Yeah.
Because that gives me 1.5 to 1, and I'm trying to get 2 to 1.
So basically, if you've got your stop loss at 5%, do you take profit at like 7%, 10%? When do you normally take profit? Just to kind of cover for the lost trades as well.
Yeah, so there's a couple different ways that you can do it. So for me, I'm going to win ideally 3 out of every 4 trades, right?
Right.
And I'm going to take profit at, depending on the time frame, either 5%, 7.5%, or 10%, or I'm going to take profit at 5%, 10%, 15%. And I always let my trade go uncapped for the last fourth of that leg, because I don't want to cap my gains.
Yeah. And what about taking profit? I mean, do you take out, like, say, 25% of your entry, or how much do you take out at all these different variables?
Yeah, so I take out 25% each at each of those profit targets.
Right.
There's another strategy where you can do 10-10, like, whatever it is. It's like 10-10-60 or 10-10-55 or something like that.
Wow. Okay.
And what that does is it allows you to take more profit at PT3. And you're only going to hit that PT3 like 1 every 3 trades, 1 every 4 winning trades. But when you hit it, it'll outweigh the other one. But if you're not automatically trading and not running back testing against that, you're better off just doing a 25%, 25% method.
Because that covers you for the losses as well. And you always come out in profit, isn't it?
Yep. And then once I hit PT1, I move my stop loss up to break even as well, just to make sure that the trade's locked in. So
Yeah. No, really good. So what's your take on, I mean, looking at this chart, what's your take on NEO? And again, not financial advice to anyone watching, but just what's your opinion on it based on this chart? Is it going to go down further? Could we see $5 or below? Or do you reckon it's going to retest maybe $10?
Yeah, as of right now, this looks bearish. What you're looking for on NEO is you're looking for what you saw over here. You're looking for an established bottom where there's going to be some accumulation and some retest of some of these lines, and then as soon as you see maybe an entry into here with some potential support, there's an opportunity here to end up getting out of here. But this Ichimoku cloud looks like it's still forming. This looks like it's all still coming down. This is giving us our first indication that there may be some consolidation, especially as we see a potential alts like pop up that's been happening with pretty much XRP, EOS, and Ethereum are leading that charge right now, as Bitcoin is slowly consolidating around this 8K range. And potentially even slowly moving up. So that could be like a magnet effect, which brings up alts as well, but it has so much to go. You're seeing this resistance at 1450, this resistance at 13, whatever this is like, $14.
So it has to break too many resistance points for it to reach $20.
Oh yeah, basically. I'm sure if I start turning on my EMAs here and just start looking at how much resistance this thing has to go through, it's a lot, but it is what it is. But I at least want to see it get into the scenario that we saw before, which is like here, which is that you have some spring back, some accumulation.
Yeah. So it's a no trade zone right now. Basically, it's in that territory, that danger territory, right? It could go down even further. So
yeah, don't catch a falling knife. That's what I like to tell people. And this is looking like it may take until November to even get into testing this area. So I'm not looking, unless there's like some massive like moon whatever, which I don't see coming. And this is on the daily, but mind you, so it's very clear to me that the trend is in a downtrend, and that we need some accumulation to get up in here.
Great.
Maybe there's some definite opportunities as a day trader or a swing trader.
For scalping.
Yeah, like if I'm looking at the 2 hour, there's been a lot of accumulation lately, and you can see that we're starting to get up into this range. It's showing me what most altcoins are showing me on the 2 hour, which is a recent pop with a little pullback here. So this cloud is weak. There's potential here to get on the other side. So, if your 2 hour goes bullish and maybe you get some Bart Simpson going on, maybe you can get a long-term hit up to like $9 to $10. Which is, your previous consolidation range. But for now, as a spot trader, this thing is just way too far out of anything reasonable for a trade.
Perfect. Cool. Thank you for that, Matty. So let's please have a look at the Ontology USDT chart as well quickly, just to see how that's looking. Because everything seems to be going downwards with alts. I mean, with Bitcoin crashing and all, it's really hard to get anything bullish with alts right now.
Yeah. So Ontology looks a little bit better. You're starting to see some definition of the bottom of your cloud here, with some flattening out, but this is not really too much of a sign. But you're starting to see at least that this is getting close in here. It looks like the same chart, to be honest.
Yeah.
You're seeing over here, here's your V bottom, here's your accumulation, here's your path of least resistance. So, pretty much all altcoins that are not EOS, XRP, or Ethereum are most likely going to look like this. It would actually be a really interesting exercise to actually go through and see if that's the case. But this looks a little bit better because you're not on like this massive downswing that you saw with Neo. Neo just looks like it's falling out of the sky.
So this one looks like it's trying to recover. Basically, we can see some green candles there. I can barely see it, but we can see some green candles on just at the very end there.
Yeah, I mean, there's a green candle here. Yeah, it'd be nice to see if we can get some traction back above these conversion baseline and 21 EMA.
And what does the 2 hour chart look like for Ontology? Just so we can kind of compare that one to Neo.
And here's another sign of what we were saying is true, because Ontology is actually getting a nice little pump into the cloud that's going to come out on the other end of this. And it's also been having a consolidation that got above this conversion line baseline in 21. See right here. Yeah. Pretty clear that this is a nice buying signal at the support. This is like almost like...
Yeah, the 50 cents, the 53, 54 cents, that was very bullish for me, because that was the last support that we had. I believe it was last year that we had. I remember getting in then and then riding the pump. But it was pretty good, pretty good, because I did find that it was like hanging around that area for so long. So it kind of told me that we're either going to go down, we're going to lose big time, or we're just going to go up. And we ended up going up 3x. So that was awesome.
Yeah, this is just an amazing trade right here. So you have the range getting established here in your consolidation as you move towards the 21.
Yeah.
You have your first look, and then it rides up to 21 and then ends up coming back down. And then you're now testing the support. So we need to find out whether or not the asset is ready to maybe put in a new low, maybe get a little bit of a low, maybe come even lower down to this wickage. But what ends up happening is that you have this candle right here, which just breaks above everything, which is a really nice candle. This is an ATR candle, which means that you're getting a candle that's much bigger than the average price movement that's happening. So, for example, if you come down to your ATR, the ATR is it's 1 cent, so 1.3 cents, and this candle ended up moving about 2.2 cents. So this candle was almost 2 ATRs of the average price movement of the previous 14 candles. So whenever you have a movement like that, it's very significant. So especially in the area of interest that it's in. Yeah. So seeing this candle here was pretty lucrative for us, and it ended up being this was a high of 6%. And then you could also buy along here if you wanted to. If you felt that this was going to consolidate up, there's plenty of buying opportunities in here. Right there, right there. Yeah. This is not a buying opportunity. This is actually potential weakness. And the reason being is because you're not seeing buy support at the baseline and conversion line.
So it made it seem like it's going to go down.
Yeah, but you can see here that after the consolidation, because the bottom of the Ichimoku cloud is still a support, you can see here at the bottom of this consolidation, it ends up getting this candle right here, and this candle is very bullish because obviously it gives you the opportunity to get back into
the 2 hours. Yeah, 2 hours.
Yep, okay. This is on the 2 hours.
So for day trading, do you recommend the 1 hour, the 2 hour, or even the 1 minute chart? Because I remember watching some videos on the 1 minute chart, and that's really good for some cryptocurrencies, because you can get like really nice scalping opportunities for 0.5, 1%, and so on.
Yeah, so I would say it's whatever you're comfortable with. I've literally traded on every time frame that there is. For me, I'm the most comfortable with swing trading the 2 to 4 hour time frame. Right. And what luxury that gives me is that I don't have to sit in front of a chart all day. Yeah, I can literally do whatever I want. If I was a day trader, I would have to open my positions in the morning, manage them throughout the day, and then close them at the end of the night. Yeah. And, for Bitcoin, you may not even see anything happen during that period of time. So you would have to embrace larger leverage if you wanted to do that. So I always tell people that it's really all about your system. You need to know your system in and out. You need to back test it, know the data. Yeah. And once you know your system, then you'll know what the flexibility is of what you're able to accomplish. So if you know your system inside and out, and you know what you want out of trading, and not just like I want to make money, but you know that, I don't want to be in front of a computer all the time, or I just want to be able to manage my trades from 9 to 5. I don't want to hold trades open while I'm asleep or whatever. Yeah. Whatever is good for you. For me, how my system works is that I identify where price is trending based on a formula. And then if price is trending between the 2 to 4 hour, great. I can go swing trade it. I don't need to be around and set alarms. But if it was trading anything less than like the 2 hour or the 1 hour, then I'm probably just going to day trade it. Unless the trade that I'm leaving open is in sync with a higher time frame. Right. So, it's really your personal preference of what you're trying to accomplish based on not only your system, but also your goals of what you want out of trading.
Wow. Nice. Good explanation. Thank you for that. So yeah, that was pretty much it from today. I'm going to switch back to the normal webcam again. Yeah. So yeah, that was pretty much it. Thank you very much. Is there anything else you'd like to say to the viewers, to anybody watching, apart from following Oh Hey Matty's YouTube channel, of course, which is going to be just in the comments below. It's going to be pinned.
Yeah, I'm actually running an affiliate program for a friend right now. If anyone plans on going out to the San Francisco Blockchain Week out in San Francisco,
when is that?
You can have it. I believe it's the end of October, early November. I believe it's like the 28th to the 3rd of October to November. But it's supposed to be a big event. I can't go because I got the kid coming and stuff.
Yeah.
So I have to be here for my wife. But I have a promo code that you can use. Just head over to my YouTube channel or my Telegram. You can look in the most recent video or in my Telegram channel. There's a link there that will give you a discount for, I believe, the tickets for the events for the week or whatever.
Right.
So if you're in the San Francisco Bay Area or California, or you plan on attending that event, then make sure you hit up that discount because you can save yourself some money.
Cool. Sounds good. Sounds good. Cool. Well, thank you very much for joining. Thank you very much for sharing your feedback on the charts and what you think of it and the long-term positions and things like that, things that may happen. Really appreciate it. And yeah, I'll see you in the next video when we're going to be talking about trading again.
Yeah, I'll see you in a few weeks. I appreciate you having me on.
Thank you. Thank you very much. Take care. Bye-bye.